Okay, this is exciting. I've used this question so many times for my classes. Okay, so we purchase Weevil. So Fred Moss is negotiating a price. The following balance sheet is given to us. So we have book value on Weevil, which is cash, land, building, net, equipment, net, copyright, net, accounts payable, notes payable, long-term. When I'm doing an asset purchase, I'm generally going to ignore the equity accounts because I'm not buying that. I'm buying the assets and in some cases assuming the liabilities. Okay, so it said that land is undervalued by 30,000. Okay, so right over here, what I'm going to go through and do is land is undervalued. So I'm going to add 30,000 to this. So my fair market value of the assets of the land is $100,000. It says the equipment is overvalued by 5,000. So I need to adjust this by 5 grand. So there's nothing else going on here. Copyright, payables, note payable long term. And this is basically, I'm selling the gallery to Moss for 350. So what I'm going to do is I'm going to add up all of these fair values and I get 250,000. So how do I go through and basically take a look at this? Okay, well, the net book value or the net value or the net fair value of the assets acquired is $250,000. I got that by adding up all of these different amounts here. My purchase price is $350,000. So my goodwill is going to be the difference here, or $100,000. So as I go through and look at this particular question, what I now need to kind of go through and do, it's asking me to do the journal entry. So this would be, we'll go 12/31/20. I'm receiving cash, and I'm always going to record these at the fair value, or excuse me, at the fair market value. So I'm getting cash of 100. I'm getting land, building, equipment, copyright. So my land is at 100. Buildings at 100, equipment and the copyright's at 100. So we have 30,000. Equipment's at 170. Then over here, I'm also, though, at the same time, I'm recording goodwill. And that's the fair value above the purchase price. Over here, I got accounts payable, and then I've got notes payable long term. Okay, and then also I'm paying cash, quick cash to seller, and I'm buying it for $350,000. Now, if I've done this correct, then my total debits and my total credits should add up. So if I do this here, I get 700, and then I get 700. And this would be to record purchase of Weevil galleries. Now, when we do an acquisition of a company, there are a lot of things that we need to make sure that we consider, including who is our buyer. And that was a huge mistake that I made once going through and dealing with this. So just make sure you know who your buyer is, because if you're assuming they're going to take over these accounts payable that could be a problem, because if they have really bad credit, that's not going to work out for you because you're going to be on the hook for it. So just a couple different things to think about. You also really want to be thinking about the tax consequences. Are there net operating losses of the business that could be potentially be utilized? So there's a lot of different things to kind of think about as you're going through this, and it's all going to be a part of that wonderful asset purchase agreement, which will be at least 50 pages of fun legalese for you to pour over. Anyways, hope you enjoy this video and looking forward to seeing you on the next one. Have a great one.